Huh, Mike? You even count
What's
as
up, mortgage coach community? Go ahead with what you were going to say.
Do you even count as a millennial yet?
I
Like,
do.
Are you
Yeah,
still a
I'm
millennial?
very proud to be a millennial.
I don't even know what the generations are anymore. You know, when you get old, once you get to like, you know, millennial and then Gen X and Gen Z, I've run out of letters. I have to go to that Greek alphabet thing. I don't know anything about it.
So mortgage coach community, I was having coffee this morning with these two guys. We got a Sosi, Avila,
up,
millennial.
guys?
How old?
33.
33. How long in the business?
6 years.
6 years.
62, 25 years.
25 years. I'm 58, so I'm the second youngest guy here. And I've got, this will be my 37th year.
You're
in
also the
mortgage
second
business.
oldest one.
Yeah. Whatever. I prefer to call it second youngest. And then
You know, it's the young guys, well, we do that stuff, right?
Yeah. Coach Mike White, what do you got? How many years in the mortgage space?
In May, it will be 40 years.
Wow. So we definitely got grandpa, 40 years in the mortgage space. And
I've been called worse.
grandpa too, right?
Uh-huh.
Yeah, we got two grandpas. I'm not a grandpa yet. And Sosi, you know, a father.
Yep.
And anyways, guys, we're talking shop about 2023. And I just thought it'd be cool to turn on the camera, stream this live into the mortgage coach community. If y'all have a question for us, because there's a lot of new loan officers still coming into the business. If you have questions for us, put them in Zoom. There's my wife, everybody. Say hi to Kelly Savage. Hey, Kelly. Sorry, audience, you can't see her. But anyway, so let us know if you have questions. So Coach Mike White, you know, what do you think 2023 is going to bring to bear, both challenge and opportunity in 2023? Let's just go around the room with that.
Well,
Biggest opportunity.
I think for a lot of people, the challenges remain pretty much the same, right? How do we generate opportunities? How do we make a better client experience? How do we reach out, grow our databases, and provide that database with ongoing value? I personally am not a big believer in the world going to hell in 2023. I think we're going to clean out some people for sure, and we're going to clean out a lot of failed systems, no doubt. But to me, it's always been about relational originations, diversification about where your business is coming from, provide exceptional value to the people that you're working with, and the business keeps coming back again and again because people love doing business with people they know, like, and trust. That has been proven year in and year out for the 40 years I've been around this thing. If you do a great job for people and you provide them exceptional value, they're there with you. And again, first loan I closed, for those of you who are interest rate sensitive, 15 7/8 and 5 points. And it took 3 days for the wire to show up at the closing office. And the people involved in that transaction were thrilled. So just keep that in mind as everybody's losing their brain over, 6 and 7% interest rates being the death knell of the business.
Yeah, no, I agree. So takeaway, tell me if you got a different takeaway. Database. If you have enough people that know you, like you, and trust you, when it comes to mortgage financing, you just have to know more of them and do less loans.
Yeah.
Is that your takeaway?
It is. It's I'm not gonna. Everything he said is true, and it's gonna be a good opportunity for the opportunity for more market share exists because there's fewer transactions. That sounds completely opposite of what it should be, but it's the opportunity lies in the fact that the loan officers that don't know how to generate business consistently, which is the key, the loan officers that don't know how to do that are the ones that are going to struggle. Because for the last 3 years, I've been saying, as I watch this play out, for the last 3 years, I've been saying it hasn't been that 3-4 years, hasn't been that difficult to get a deal. It just hasn't. And if you have a shingle and you hung it out there, you could get deals, and that's changed. And so the opportunity for market share exists because that's gone. And it's real estate agents are struggling just as much to get opportunities as we are. Yeah. That's the opportunity, because the good ones, and you're going to have to talk to more. But again, this goes back to It was hard to do all the transactions we were doing in 2020, 2021. That was a hard job. It wasn't hard to get loans. It was hard to do all the business well, really hard. This is a different hard. That's all this is. It's a different hard. And so go to work and build those relationships, because this isn't going to last. And the industry is going to clean itself out. We watched this, and we've watched this a couple, 3 times.
Yeah.
And, you know, I don't have any double-digit interest rate stories. My best year in the business was 8.5%. My best month, 8.5% on a 30-year fix with a point. And it was April of 2000. It was right before the NASDAQ. It was right when the NASDAQ peaked before it crashed in 2000. And I'm in Denver, Colorado. We had like 4 or 5 years of just crap purchase volume, and you had to grind like crazy to get deals. And it didn't turn around. I mean, we led the nation in foreclosures in Denver, remember? Like we were leading every month. The new article, the new headline would come out for that. And so how did we survive? It's like, well, we didn't know 2020, 2021 volume.
Right.
That's it. That really messed up a lot of people's.
Well, and we built
viewpoint.
infrastructure. So, I mean, you know, the companies have built machines to do 4 trillion in mortgage debt, and you know, take an industry that could do 4 trillion and bring it down to an industry that can do, what are we at, Coach Mike, in terms of, you know, expected mortgage volume in 23? I don't remember off the top of my head.
It'd probably be, you know, short of 2, but
Yeah, like
you
1.7,
know, again,
1.8 trillion.
see, some of the stuff that kind of gets lost in the mix is I've got people whose loan volume unit wise is down, but they're very close to the same dollar amount because, you know, the loan sizes were larger, you know, so, and depending upon what market you're in, like some of the places where I have clients, it's that second and third purchase house market, right? The second or third trade up house, not the top of the market, not the $1 million plus market in most cases. I mean, obviously California, whatever, those are trade up houses, but in America as a whole, you know, when it comes to average loan volume, that stuff below the Fannie Mae limits, that second 2/3 of the Fannie Mae limit, the second trade up house, there's really solid interest in that. And those people, especially as they transition of, hey, I'm working from home now, I'd like a home walk, they got different requirements. And that whole real estate average, like even realtors have to learn, right? Location, that has changed, because location, while it matters for different reasons, because it's not to commute to the office as much as what have I surrounded myself with for the other aspects of life, right? And that, I think those are the things that you have to look at, are those strategies of the fact that how do you help people with their sales funnels and the thing, if you, like now there's so much misinformation and gloom and doom. Well, if the housing market's going to collapse and we're going to go down, you know, houses are going to lose 70% of their value, why would I buy a house? We all know that that's not going to happen, but it doesn't stop the clickbait people on social media and the internet from being out there posting a headline, because that's what triggers a response, and that's how they get paid. They're monetizing clicks. They got no interest in putting out great information. And that's where I think you guys are really beneficial, because the stuff that you put out there is accurate and helpful information. It's a trusted resource. I send my people there all the time simply because there's just so much garbage out there. It's easy to get wrapped up into false headlines. And what is the consumer doesn't know anything of who's the good guy, who's the bad guy, until we show them who the good guy is.
So Sosi, you're the millennial in the room. I position this as we've got, you know, multiple generations of mortgage leaders here, ranging from 40 to 20 to 30 years, and you've got less than 10. You know, what are you most concerned about? What do you think the biggest opportunities are?
Yeah, the piece that really resonates with me here in this conversation specifically is remembering that, you know, even on the millennial world, right, there's always jokes that we feel like we're uncovering or discovering stuff, and we're thinking that no one else has seen it like us before. But whenever I'm in a room with such wisdom, I get really humbled, because I'm like, all we're doing is rediscovering, right? There's nothing new. Legitimately, it's the same basics. Create for yourself an ecosystem that you generate business out of, convert that business in such a way that then they get entered into your ecosystem, and it's just a rinse and repeat matter the whole way through. And so I'm just super humbled because the pillars are all the same, right? Like the capitals and the bases. And if you guys have ever been to Rome and you see the architecture and all that stuff, like the things that stand true. They just might be designed differently without the different eras. And so to your point, Coach, one of the things that I've been seeing is I'm trying to go into the social media world. I'm doing all these things, get messages out. And I got told by this other guy, he was just like, oh, so you're pretty much just being a modern day radio broadcaster. I was like, oh, I guess I am. That's all it is, right? It's another venue of generating business and generating leads. And so right now, more than ever, there's just those basics. Let's go generate business, take care of our clients in such a way that from there, when we give them the offer to manage them and their portfolio, as they look at the second homes and the move ups, they come to us as that resource of information to make that cycle go all over again.
I dig it. So what do you think the biggest opportunity is? And we're just going to go around the room. I'm going to share what I think the biggest opportunities are, but what do you think are the one or two biggest opportunities in 2023?
I think the biggest opportunities in 2 words for me would be working smart and working hard. Those are the 2 biggest opportunities, right? There's a lot of people who are going to be having exhaustion from just working a lot last year, and they've lost the fundamentals. Dave, can you say your quote again that you've said a few times this morning?
This is Mike White's quote.
What is it again?
You either don't know what to do or you're choosing or refusing not to do it.
Say it again.
You either don't know what to do or you're choosing or refusing not to do it. And it's a Mike White. It's like brilliant because you can always find out what to do in this business.
Yeah.
This is a perfect venue for that. So that's it.
I think people, because of exhaustion last year, are going to choose to not do what they know they have to do. And they're going to give themselves reasons and make up excuses and be half-assed at going out and grinding and generating the business. And that's where the opportunity comes in for guys like, I know me, where I go, I got to outwork people when everyone's exhausted right now. And I got to do it smarter by going for not just open houses, but database management, going for the radio broadcaster of the modern day, making sure information is out there in a way that consumers want to come and get it. So that's my 2 opportunities I'm looking at.
1 or 2, David?
Foundations and the basics. All right. Right. So do you have a solid foundation and that's your database? And this isn't for a brand new person. Right. And because I was thinking, we were talking about like, there are brand new people still coming into the business. And I think there's going to be a great opportunity for that going forward because of just what everybody else is experiencing. But it's that foundational. We were laughing, Mike. I was telling the story when we first met and you were asking me how many deals I was closing and how many leads I was getting. And I didn't know. I was like, oh, a good amount. And so like the basics of, you can be a loan officer and do okay in this business, or you can take a business person's approach to, I'm going to know my numbers. Like how many leads did I get this week? And knowing that number and reporting it to yourself every week is pretty much all the motivation you're going to need to know, I got to make some more calls today.
Yeah.
Right. Like, it's like, I only got 3 leads this week. Like, dude, 3's not enough.
Yep.
You need way more than 3 leads a week. And so just knowing the basic, going back to that basics and understanding that you have to know your numbers, and you have to, like, it starts there. If now you know what to work on.
So Coach, 1 or 2 biggest opportunities, and then it's my turn, and we'll talk about some of the things I'm going to throw out here, and then we'll wrap it up. So if you are watching this live, put your questions down below. If you're watching this on YouTube, we'll still make sure your questions get answered somehow. Coach, what do you got?
I'm actually humbled to sit here and hear some of my own stuff come back. And there were a lot of times that Dave and I have had differences of opinion, we'll put it that way, about how to do things and when they should be done.
Because
I've known each other a really long time. And to hear and to watch actually what he's done, a tribute to what can happen if people just pay attention to the fundamentals. Last year I did a training and I was a group of people who were mostly younger people. And the guy didn't hire me to come do trainings for his company because the loan of people that were there told him that they had nothing to learn from this guy who was old school. And note to self, that company closed its doors 3 weeks ago. Maybe there was something they could have learned from the old guy, because the old school stuff, and again, Like you say, millennials, you're right. Nothing changes in the mortgage business. It's generate an opportunity, process that opportunity, close that opportunity, stay in contact with that person through value. How you do that becomes a little tricky, and technology and all these other things. But you know what still work? Pick up the damn phone and talk to somebody. Go out and get in front of somebody. Ask somebody if you can help them. Strange world we live in. But yeah, Dave, I will say this till I die. In fact, I'm contemplating it being on the tombstone. You either don't know what to do or you refuse to do it. And I'm just going to have below that, my response is I did, and I did. Because it's not that hard. People want to make this really hard. What's hard is not understanding how the process is simple. The more you can simplify your day-to-day life, the less really hard this becomes. And I think, Dave, you've probably mastered this as good as anybody. And he went from not knowing any of his numbers to now being able to recite data. It's amazing what you can do if you just control the little things. And you control all your little things all day. And the next thing you know, you had a great day, and then a great week, and a great month, and for Dave, a great life. And it comes together. So, you know, and it's not that more complicated. It really isn't.
So let me share some thoughts, get some impressions, and then we'll wrap up this little sesh. So I think in 2023, there's really 3 types of loans that matter most, you know, and I'm always going to be, your database is your number 1 priority. So, you know, whether it's doing annual reviews, it's monitoring your database with Sales Boomerang and making sure that all the signals and all the insights in your database, you know about them. You know, you're calling your equity alerts. I've got so many interviews that I've done where loans that would have never happened because a loan officer is doing a combination of annual reviews, checking in, or they're calling at the right time with the right strategy because they're monitoring a database. So that's one type of loan. And I think, you know, in this market, every lead, every loan, every basis point matters more. So, you know, database is always going to be my number 1 strategy. And I think the conversation we've had pretty much just supports that. I do think this is a different year for first-time home buyers. You know, when you look at how difficult it was to, you know, marry a home, marry your home, date your rate. It was in 2020 and 2021. I mean, it was hard for first-time home buyers to win a deal. And this year it's a lot easier. And I think 23, it's going to be relatively, if you can afford to buy a home, you're not going to have a lot of competition. But I do think 24, when you look at NARS, what they expect values to do in 24, when you look at what just about everybody does, like between now and the end of 23, it's probably going to be the best time to buy a house that we'll ever see. And so being able to tell that story through data, to be able to show that story with a rep versus own with MortgageCoach, like, I think that's a really important conversation and skill to master. So anyone listening to this, like being a first-time home buying expert, having, being able to have a data-driven advice conversation with a consumer so that they're making their own decision based off of NARS data, keeping current matters data. There's lots of great data supporting, like it's going to be an amazing time to marry the house and date the rate. So that's super important. And then the other, so 1, database, 2, first-time home buyers. And then number 3, I do think we're in a new era of how you have to help a move-up buyer. Coach Mike White, take a guess how you could guess it either way. What percentage of mortgages in America today start with a 2 or a 3?
Start with a 2 or a 3, probably 45%.
Did I tell you the number yet?
No.
What do you think it is?
I was going to say somewhere in the 30s.
Have I told you?
No, I was gonna say 45.
So guys, here is breaking news. Because I'm the Chief Innovation Officer of Sales Boomerang, I have access to all data. I mean, I've got Black Knight's database, I've got Experience database, I have CoreLogic's database. You know, we have every household in America ×5 plus 20 other database sources. Guys, this is going to shock you, but is about 8.2 trillion in debt with 3% or less. So that means it's about 67% of every mortgage in America starts with a 2 or 3. Guys, it's a new era.
Shit.
Yeah, you're going to need to, if you're a loan officer, you're going to need to be able to talk to a move-up buyer. If they've got a 2% rate, you know, something that starts with a 2, that's not a liability, that's an asset. And you're going to have a conversation with them that, hey, you could rent out your home and move up, and look what that could do to your net worth and your financial freedom. Or, hey, I know you're giving up this 2% rate for 4 point whatever, 5 point whatever, 6 point whatever. But look, you know, look at the wealth and the net worth benefit if it's going to appreciate. So, you know, I've been doing this for 37 years, and for my entire career, rates have gone down. You know, so rates, when I got in, they were like 10 point something at 2 points. My first loan was like 10.3 at two points. And they've just gone down. You know, like we had some up years and we had some flat years, but for the most part, they've historically gone down. And that was, you know, the biggest trend of my career. The second biggest trend of my career is this, you know, it's like technology. You know, like when I got in the business, we were taking handwritten apps and typed out 1003s, and the LOS came, and then the iPhone came, and then the rocket went off during a Super Bowl ad. And technology has been the greatest shift of my career. But I do think going forward, knowing that, you know, there's 8 trillion in mortgage debt that starts with a 2 or 3, like it truly is the era of the advisor. Like if you can't help a first-time home buyer get off the fence and into escrow, if you can't help a move-up buyer build wealth with real estate and move up, like you're in trouble. Like you need to have advice skills. Let's give everybody's thoughts and then let's wrap it up.
Well, I'm surprised at the statistic. I didn't think it was that high. And so,
Well, think about how much mortgage debt was done in 2000? Like
Right.
4 trillion?
yeah.
How much mortgage debt was done in 21?
Yeah, 4 trillion.
4 trillion?
Yeah.
What's 4 trillion plus 4 trillion? I mean, you know,
Yeah. So yeah, I'm thinking about it. Well, I guess that makes total sense. That's a whole different, it's a whole different level of advisor role, and a great opportunity to
differentiate.
to really set yourself apart, because you're right. Like it's not a liability anymore. It is an asset. Like this is really, really cheap money, and I don't ever want to get rid of it. Like, how can I slow down the payments?
How can I leverage that?
Yeah, how can I slow down those payments? So you don't want to pay it off faster. So that is a great opportunity. What a great insight. That's great data.
Yeah, and I do think, guys, we're going to work on getting some slides. I'm going to be talking to the Mortgage Coach community. I'm sure we'll have some just great illustrations on this. What are your thoughts on that? And we'll get Coach Mike's, and then we'll wrap up our chat.
Yeah, it's definitely, I'm already just trying to even think of what new mortgage TCAs I want to put out for it, because right, there's such small amount of debt, or there's a debt with such a small amount of cost that opportunity piece of equity that has grown that can be tapped into with HELOCs and leverage into other properties, or looking at departing residents and then selling those within that capital gains 5-year mark. I mean, there's just a lot there. So I'm really looking forward to being able to see what other creativity and inspirational pieces we can bring in, because the reality is this, right? People think the way they think until they're exposed to a newer thought process, right? Like Dave and I were speaking last night at dinner, and we're talking about how when you do humanitarian aid, you're able to bring a new idea to people that never even had that point of reference in their imagination, right? We've gone into houses where we put in a new ceiling or we put in tile floor, and the kids are like, man, I'd never want to live in a house without ceiling and a tile floor now. And so that being the case, you see that you create a new way of imagination for a person by just giving them that new thought. And so for us as mortgage professionals, knowing where the debt's at and knowing that there's new thinking that needs to be introduced to the consumer, I'm really excited from a collective in the mortgage community to collaborate on what inspiration we need to give to our clients so that we can help the next generation of Americans truly leverage that wealth.
So Scott Short just put in chat, what percentage of that 67% is FHA, VA, USDA, which are assumable loans? So by the way, Scott, I love the way your mind's working. I will look that up. I have that data. So I will, when I'm not on this call, I will answer your question and comments. But Scott, you bring up a really good point. You need to bring this leadership to realtors. Realtors don't know this. I mean, here we are in the mortgage business. And by the way, I've asked a dozen of some of the brightest minds in mortgage the question I just asked. Hey, what percentage of loans do you think are 3% or less? And everybody's been under 50%. And the most common answer has been 30%, 33%. And so these are like smart mortgage people that are like off 2x. It's more like 65, 66, 67%. So this is news for realtors. And so this is, I would come out the gates on January with some great slides, some examples of TCAs where, you know what, you need to work with an advisor. Like the age of working with loan officers who can close loans, who have competitive rates, like it's over. Like if the loan officer can't help the family get off the fence and into escrow and under contract, because with advice, like you need a different loan officer. So Coach Mike White, we're going to let you wrap it up. Closing thoughts, any comments?
Well, I think it's funny that you just brought up the whole conversation. I think it's a great question. What percentage of those loans are assumable? And again, being who I am and my warped way of thinking, my first brain impulse was to say, how many loan officers who are licensed right now don't even know what the word assumable means and the fact that it's actually doable, much less even know anybody that has ever in their life ever done one or works for a company that has never even known what the form would look like on how you will go about doing this. So there's one thing when it comes to information, which is kind of weird, but I think to the point is, I think you're driving it is the fact that the data and all that stuff is great, provided you can have the conversation to address how it's of value to the customer to know this stuff, right? You can deal with all the charts and graphs and numbers that you want, but if you don't understand, as Steve Harney used to tell me back in the day, everybody's favorite radio station is WIFM. What's in it for me, right?
Right.
Whether it's holding on to that 2% mortgage and making that, and renting that house out, you've got people in the market today are still telling people to make biweekly payments or pay their mortgage off early, right? Because really they're sitting there with a 26% credit card, but they're making extra payments toward their 2% mortgage. Okay, how do we stop that belief system? And I think it's not only like you talk about the realtors, but your accountants, your financial planners, I've got loan officers doing all kinds of business with divorce attorneys because they need to know the nuances of why, right? And the whole rate thing, entirely overdone. It's never, ever been about rate. Rated is an emotional context. Payment is a physical reality. We've never once ever qualified anybody on a rate. You qualify every borrower on their payments. And those are the conversations where you can win, especially that first-time home buyer. Your rent versus own, that analysis of that situation is eye-popping to people in most markets, but very few people ever see that. So yeah, I think all those things happen. The first-time buyer is going to be back stronger than you wanted because they had a hiatus. They couldn't compete. They couldn't go 50,000 over asking. They couldn't get a seller's concession, right? Nobody wanted to take an FHA loan or a VA loan, or they didn't want to be part of that process at all. All of those things are coming back. Those people are going to come back from renting because at the core part of it, statistically, 2/3 of the people in this country are going to own where they live, right? And yes, millennials, I just did it in my vlog post this past week. Yeah, millennials are a little late. Gen Xers are a little late coming to the theory of home ownership, but they're starting to get it. And more people like you out there, you know, looking like me, people in their 30s buying the houses and having conversations about, you know, amortization and equity builds and all these other things. How many people who are Gen Xers or Gen Z people got any idea of any of those terms? And it's not a slap against them. They only know what they've been taught. They only know what they hear. And that's not a conversation that generally takes place. It just isn't. And I think we've got to get back to elevating the conversation, not talking over people's heads, showing them why it matters to them. And if you can do that, the whole client for life thing works out. The whole maintaining a database works out. When you sit there and you can explain it in a way where they can see the value in it, you're gonna win. You just are. And at least you'll win a lot more than you lose, and that's all that ever matters.
Right on, guys. So we're gonna wrap this up. My challenge to every loan officer and every manager listening to this is that this is the year where every single borrower that you do a pre-qual for, you need to know what is the net worth benefit. You know, like we need to focus on that. First-time home buyers, like if they're gonna look at owning versus renting, what does that do to their net worth? And if you don't know the answer, well, then you're just a loan officer, not an advisor. Every move-up buyer, what's the impact on their net worth? You know, based off their assumptions of rates and appreciation rates. Like take those two data points. Yes, to do this, you need to do a total cost analysis. But guys, that's what time it is in the mortgage space. You know, loan officers, you're going to get people out of 2, out of 3. If you're going to get first-time home buyers in this chaotic market to jump off of rent and jump into a mortgage, you've got to be having more than a mortgage conversation. You need to be having a net worth, a financial freedom conversation. I sensed you had one last thing to say.
Yeah, because I was just thinking that I'm reminded of the NAR stat that comes out all the time.
Yeah,
That the average net worth of a homeowner is it 40 times greater than a renter.
Good slide to have.
That let's start the conversation there.
Yeah.
You're a renter. Did you know this? Did you know that the average net worth of a homeowner in America is 40 times greater? There's a really specific reason why that's a fact. It's because renting builds no equity.
Yeah.
How about this? How about the 3 of us collaborate? You know, you're still on vacation for a few more days, but like maybe by the middle of the month, you know, like the 15th,
Yeah.
we jump back on a call and we show like what are the 3 slides and what are the 2 TCAs?
Yeah.
One for first-time homebuyers, one for move up,
First-time sellers.
and we just keep it simple. And
really
we
simple. Hard hitting.
we bring Coach Mike White back. You know,
that'd be great.
you and I might be next to each other. You know, you'll be on Zoom.
Yeah.
You guys cool with scheduling
Yeah,
something
it'd be fun.
mid-month?
Yeah, right.
Mike's gonna be the client.
Yeah, Coach Mike, you be the client. So guys, we're gonna wrap this up. It was fun talking shop. I am super pumped for 2023. I did a lot of writing this week. I will be posting on LinkedIn the top 10 videos in the Mortgage Coach YouTube channel. I'm going to include the top 20 because the top 10 are amazing, but the next 10 were pretty damn amazing. So it's going to have really, you know, top 10, top 20, and then I'm going to call out the 5 mega trends that I think every loan officer needs to just focus on would be an understatement. Obsess over, and if you do obsess over these 5 micro trends, and you do what the best are already doing, guys, you're going to gain market share. Like next year, it's not going to be an easy year. It's going to be another tough year in the mortgage business, but it could be a great year to get better and a great year to gain market share. So take care, everybody. This is a wrap. Hey, Coach, you didn't join us here. Come on out. All right, take care, everybody.
You're lucky the